The SEC approves Bitcoin ETFs. Welcome to this short, quick insight video on the Securities and Exchange Commission approval of exchange-traded funds to track Bitcoin. I'm Ross Maynard. Up until this point, regulators have warned investors against cryptocurrencies. Now the SEC has approved 11 ETFs that track the value of Bitcoin. However, the SEC approval still cautions investors about these virtual currencies. The Securities and Exchange Commission approval was given on the 10th of January 2024. It applies to 11 ETFs from 11 investment management firms. An exchange-traded fund is an easy way to invest in assets without having to buy the assets themselves. You now do not need a cryptocurrency wallet to buy into Bitcoin, and any adult United States citizen with access to a dealing service can buy into an ETF which tracks Bitcoin. Buying into one of these ETFs may be considered safer than going through a cryptocurrency trading platform. As we know from recent criminal cases, cryptocurrency platforms have been plagued with concerns about bad management, money laundering, and fraud. Buying into an exchange-traded fund from a reputable investment management company doesn't remove the risk that the value of Bitcoin will drop, but it does remove the danger that one's holding itself will disappear. The investment companies given approval to offer Bitcoin ETFs include BlackRock, Fidelity Investments, Franklin, and Invesco. I give a full list of funds approved at the bottom of the slide. The involvement of established investment management companies in this market makes it likely that the market for cryptocurrency, now made easier to access, will increase. One analyst suggested that the offerings could attract up to $100 billion in investor funds over the next 5 years. Others are more cautious. Regardless of this approval, the Securities and Exchange Commission emphasized that its approval does not equate to endorsement of investments in Bitcoin. The SEC chairman noted, quote, "While we approved the listing and trading of certain spot Bitcoin ETP shares today, we did not approve or endorse Bitcoin. Investors should remain cautious about the myriad risks associated with Bitcoin and products whose value is tied to crypto." End quote. And the SEC decision itself was not unanimous. Commissioner Caroline Crenshaw dissented and stated, quote, "I am concerned that these products will flood the markets and land squarely in the retirement accounts of US households who can least afford to lose their savings to the fraud and manipulation that appears prevalent in the spot Bitcoin markets." End quote. Buyer beware is very much the message, and many remain concerned. Yanis Giorkas, Senior Director of Moody's Analytics, said, quote, "The notorious price volatility of Bitcoin could expose mainstream investors to a less familiar spectrum of investment risks." End quote. Even more outspoken was the president of the investor watchdog organization Better Markets. Dennis Kalia said, quote, "With the flagrantly lawless crypto industry crashing and burning due to a mountain of arrests, criminal convictions, bankruptcies, lawsuits, scandals, massive losses, and millions of investor and customer victims, who would have thought that the SEC would come to its rescue by approving a trusted and familiar investment vehicle that will enable the mass marketing of a known worthless, volatile, and fraud-filled financial product to Main Street Americans?" End quote. Harsh words indeed. To provide some balance, I should note that supporters of cryptocurrencies are more enthusiastic. Sheila Warren, CEO of the Crypto Council for Innovation, issued a statement in which she said, quote, "Allowing investors to partake in the Bitcoin journey without the technical hurdles of direct ownership is a significant step towards inclusivity." End quote. However, the fact remains that Bitcoin and other cryptocurrencies are a difficult and risky investment. My suggestion, for what it's worth, is that only investors with significant experience in investing in the money markets and who can afford to lose their investment in Bitcoin should consider venturing into any of these ETFs. I am certainly not moving my pension. The problem with crypto. The fundamental difficulty of investing in a Bitcoin ETF is that it's practically impossible to determine the underlying value of the asset, unlike buying stock in an established company. The published results of listed companies provide indicators that help to value their stock, or at least provide a value range. Bitcoin and other cryptocurrencies have no underlying assets. As the investment news and analysis site Morningstar says, quote, "Bitcoin is a speculative investment. There is no fundamental reason why it is priced where it is today. It is at the whims of supply and demand, making future prices hard to predict. Investors must understand that Bitcoin prices, and therefore these ETFs, are untethered from a fundamental value." End quote. Trading in the Bitcoin ETFs. There have only been 2 full working days since the Bitcoin ETFs were approved, and as we can see from the price chart for the Valkyrie Bitcoin ETF, there hasn't been a huge rush to buy into this particular ETF. The price of the fund started at $13.99 per share on the 11th of January, but closed on the 12th at $12.47, an 11% fall. The volume of trading was not large. The value of Bitcoin itself saw a similar drop over those few days. The all-time high for Bitcoin was in November 2021, when 1 Bitcoin was valued at $69,000. That value crashed to below $17,000 in November 2022, but it gradually recovered, and on 8th of January 2024, it was at $46,995. A few minutes before recording this video, Bitcoin stood at $42,250. At present, these ETFs are only available to US-based investors, as they have not been approved by any European regulators or others elsewhere. That may come. We wait and see. I find it interesting and fun to examine company fundamentals, their products and services, and their growth plans, and make a small investment in the hope of achieving growth. However, I personally do not see the same appeal in cryptocurrency. There are no fundamentals to examine, and no underlying products, services, markets, or patents to review. Investment in these funds, therefore, would seem to be the same as betting. But even in betting you can review the form of the sport you're interested in. With cryptocurrencies, there's no form as such. I'm not a financial advisor, and you must make your own decisions. I advise caution and urge you not to invest any funds you cannot afford to lose. Let me finish this video with a quote from the BBC article on the SEC decision. Quote, "Some say this landmark decision shows the establishment is finally taking Bitcoin seriously, at least as a speculative asset. For those that consider Bitcoin legitimate digital gold, what better proof could there be than the biggest wealth management institutions flocking to buy, overseen by regulators? Others say cryptocurrency is about rejecting traditional financial systems in favour of a decentralised, people-powered alternative." End quote. I will leave you to make your own minds up. Thank you for watching this quick insight video on the SEC approval of Bitcoin exchange-traded funds. I hope you found it informative. I'm Ross Maynard. Goodbye.